Goeienaand, good evening, fellow South Africans and citizens of the world. And you know, there's one great truth in life, and there's one huge elephant in the room, and that is that money, the stuff that we use to buy stuff, does not grow on trees. It has to be earned. And the problem with South Africa and the way the ANC has run the country for the last 25 years, they have run it as if money does grow on trees, and they have borrowed to the limit. They've run out of wriggle room. The state-owned enterprises are all basically delinquent now financially. Most of the municipalities, apart from Arania, which unsurprisingly has basically a white management, but just about every other municipality in the country is either bankrupt, or it's under administration, or it's well on the way to being bankrupt. And of course, service delivery has stopped. And, you know, you would be pretty much on the money if you said there were two factors that caused this in South Africa. One is complete incompetence, and the second one is corruption. And, of course, we have other factors as well, but they're the two main ones. And what has been behind all this? A very simple little acronym called BEE. Yeah. And we all know what BEE is and the impact that's had on minority groups, and in particular the white people. But what impact has BEE had on the South African economy, which impacts on everybody regardless of race? Well, let me tell you. The South African Reserve Bank highlighted the country's deteriorating fiscal circumstances, thanks largely to bailouts for ailing state-owned enterprises, as one of the main risks to the economy in its latest monetary policy review released on Tuesday. This, as well as risks posed by the slowdown in global trade and the possibility of a global recession, could worsen already difficult domestic growth situation, the bank said. Now, what we're talking about here is the likelihood that Moody's is going to reduce the rand to junk status, which is going to have a huge impact on the value of the rand. It's going to just crash. And if and when it does that, because the other rating agencies already have South African rand as junk, it means that it's going to be very hard for the South African government to borrow money. And in fact, they're going to have to pull their heads in. And that's going to mean tens of thousands of public servant jobs, which really aren't needed. They're there because they're mates, they're cadres. They're going to be forced to retrench those people. So there's going to be a huge and growing unemployment crisis in South Africa. And what does that mean? It means there are going to be more people on the streets starving, and it means there's going to be more crime, increasing crime. And this is the legacy of the ANC. This is their fault. It's not Jan van Riebeck's fault. It's not apartheid's fault. It's the ANC's fault. They have totally mismanaged the country for the last 25 years. And I don't have to go into the details, already discussed them. Anyway, getting back to the story here. The Reserve Bank typically prefers not to comment on fiscal policy. It underscored the effect that deteriorating state finances, along with issues such as policy uncertainty, are having on the ability of monetary policy to support growth. The bank's review comes as Finance Minister Tito Mboweni is due to give his medium-term budget policy statement, or MTBPS, at the end of the month. Mboweni is expected to detail the effect additional support for state-owned enterprises like Eskom and poor economic growth is having on government finances. Since the preview review published in April, the fiscal picture has deteriorated sharply, the bank said, adding that the government's budget deficit is now expanding again. Economists have warned that the government's budget deficit could reach 6% of GDP. This is significantly higher than the 4.7% forecast for 2019-2020 in February's budget. Similarly, the debt-to-GDP ratio is also expected to worsen to about 58%, up from February's forecast of 56.2%. The country's potential growth rate has slumped to below 1% in the context of supply constraints, particularly electricity shortages and depressed business confidence. Demand has also weakened thanks to higher taxes and slowing wage growth, among other factors, the bank said. The bank warned the economy has also been buffeted by supply-side shocks and sentiment is suffering from the ongoing policy uncertainty. Where monetary policy enjoys margin for maneuver, weak demand is a problem that can be addressed within interest rates. Supply shocks and policy uncertainty, however, are beyond the reach of the Reserve Bank. There are risks that a change in the environment could force an outright tight policy stance, the bank warned. To control these risks, South Africa needs reforms, it said, which are likely to entail short-term pain. The cost of postponing reforms further, however, is rising at an escalating rate. So what we're talking about here, and if you get rid of the Mickey Mouse words, is that the government is being pushed into a corner where it's got no choice but to start taking hard decisions. And as I said, that's going to have a huge impact on the level of crime in South Africa. So guys, just be prepared and look, make sure you have a plan B, okay? And make sure that you prep. All right, guys, please remember to subscribe to be kept informed. Ring the bell for the updates. Please like this video. Please share this video. And above all, be safe. And don't forget, tonight at 8 p.m. Johannesburg time, I'm having a discussion or chat with Willem Petzer and a guest. Cheers, guys. Bye for now.